Good morning and welcome to Trade Watch, Wednesday, the 2nd of November. Hump day, as per usual. I'm here with Claude. Welcome, Claude. And just a quick equity story disclaimer in front of you. General advice, of course, everything we talk about stock-wise is going to be based on the story itself and technicals. So fundamentals and technicals, and we don't take any in consideration of your personal circumstances. Claude, welcome. We had a good start to the week. We had a pretty good week last week. I think the markets are sort of in the US now gravitating towards waiting for that Fed decision, which is due. I think I just had a look at on the November the 3rd, which is a Thursday, which is going to be Friday for us. So that potentially could drive our markets one way or the other. A big catalyst coming up. Prediction was, I think, for further, of course, interest rates, but if it's going to be on the high side, might see it down. If it's what expected, maybe we'll see a more of green stock markets, which is quite good. And it's funny enough, I mean, we spoke about it last couple of days, is that markets almost cheering now some of these interest rate rises. We saw yesterday with our own RBA, the 0.25 enough for Australia. So maybe there'll be something like that as well in America. If they don't go too hard, maybe it will be cheered. Any comments on top of that?
Just that I'm constantly afraid that, we'll have a situation where at the moment now they're sort of, well, at least in Australia, like slowing down on interest rate rises. And I just wonder, like, it still seems like the economy is pumping, at least in Australia, just from what I like anecdotally see. Mm-hmm. And so I just wonder, is there some risk that we're being premature in celebrating this like 0.25 raise, and in fact what that means is that it's going to be a much longer, harder, tougher market, and so that's what I'm a little bit worried about, is if there's another bout of like, oh no, inflation's still out of control, it's not getting better. I don't know how it plays out. I think I fall into your camp in that I'd prefer see them just hit it really hard and cause a little recession and stabilize there.
Yeah, look, I can understand what they're trying to do to avoid that hard recession, right? Quick and hard. But this drawn out affair, I don't like it. It's just it could drag on for some time, and especially if the inflation is not tamed, it's going to be very frustrating. I'd say it's not going to help anyone. So I'd rather, a bit of short-term pain for long-term gain is my sort of way of doing things. But we'll see what happens. And yeah, I'm with you. I'd rather see that quick, sharp, get on top of it, smash it down a bit, and then we can maybe ease off a bit. All right. This morning's announcement. So there's not many. I mean, we're past our reporting season now. So we're now into November and moving into December, which is hopefully going to be a little bit more quieter period. But, there's still AGMs, there's still updates, but it's not as crazy as it was in October, of course. I've got, let me see, 1, 2, 3, 4 stories. You've got a couple you want to talk about. So let's start, first of all, with GMG, which I'm going to put, of course, the chart on. We can have a quick look at. And I know it's not your cup of tea, which is okay. I'm a fan of this because of the management of how they run the company. The recent, I suppose, the last 2 or 3 years, navigating through the COVIDs and everything else. And of course, I'm a big fan. If the management can demonstrate to me that they can do that, doesn't matter what environment it is, they can still deliver some sort of good news to the shareholders. I'm a big fan of that. And, it's been, of course, been sold down over the last little period because of recession fears. It's in that space, the real estate space. So there's going to be a little bit of question marks over the company. But today's announcement, I like it because they reiterated the guidance, 11% EPS growth. In a market like this, company that's I've got question marks. Really, it should be suffering somewhat, but it still can eke out a double-digit growth. I'm very happy with that as a shareholder. It's not a cheap story, but it's one of those stories that really market likes, as long as they keep delivering that good news. So for me, as you can see, the share price has languished. It's coming back up. We talked about it as possible, a bit of a nibble here if you're a long-term investor. So I'm happy with that result, and hopefully that should hopefully come over that $18 and start heading a little bit higher. But I think generally speaking, Claude, I think a big story like this, top 50, it's probably going to go a little bit sideways, as long as they can keep that momentum going and the market sort of starts understanding that it's not going to shoot the lights out. I'm hoping, as long as it doesn't come up with anything bad, it hold the line and it can eke a little bit further gains out over the next 12 months. So I'm happy with that. One of my cornerstone investments in my portfolio, and a little bit of dividend as well as a little bit bonus. So anything else to add to that?
Not really. I think it's all pretty fair.
Yep.
Don't disagree on anything strongly.
Right. Next one, AMC. So these guys are in the packaging business. It's not a bad business. Pretty low growth. Again, probably going to get hit with the inflation and everything else. They're sort of navigating through that again. Okay, the share price is not great, as you can see the chart right now. We've got a preference towards Aurora, which is our sort of, you can call it a cheaper story. Again, in that packaging space, and it's not an easy story to get excited about and put in a portfolio. Again, we own a little bit of Aurora. The fact is, it looks cheap historically on its PE ratios. The growth is there. So at least from MAC's point of view, from what I like, Claude, is there, again, reiterated his guidance. However, they have adjusted the guidance on a US FX basis. So they've actually downgraded on that. Again, it's not my cup of tea, I suppose, AMC, but I prefer the little bit Aurora space. So I'm happy to hold it for the moment, as long as it's hold that's $3. You got a 5% dividend yield. So as a dividend with a little bit of growth for our investors, we're okay with that. Again, anything to add to that?
Look, I think that, are we talking about Amcor or Aurora?
We're talking about Amcor right here. Aurora is the preferred bid, so I'm not going to talk about that. But at least it's good to see that there's nothing specifically bad about AMC's results, which reflects, I suppose, positively, hopefully, on Aurora as well. So that space is going okay-ish.
Yeah, look, I think it's considered a defensive space, so not unreasonable. Mm-hmm. I probably, like you, prefer Aurora, just because for me, for a defensive company like this, you're looking, well, supposedly defensive company, you're looking for a higher dividend yield, because you're probably not going to get a big gain long term in the share price. I wouldn't call it a multi-year compounder or anything like that. So yeah, that you're looking for that dividend. Amcor's is only a bit smaller. I think it's 3.5. Trying to go off memory there. Let me just check. Yeah, no, 4% almost. So not too bad on Amcor really, but probably a little bit low. Like, I prefer some different stocks for a 4% dividend that have a bit more chance of growth.
Correct. I agree with you. That's why, that five a little bit more percent just gives it an extra bit of, enticement for me to own Aurora instead of Amcor. All right, so let's move on to the next one, which is VUL. They've just come up with an update. And I know there's a few people, investors that, like some of these lithium stories. Vulcan's one of them, and it's been a market darling for some time, but, recent maybe performances haven't been that fantastic. Still slightly up below the trend, so it's not one that we're probably trending at the moment. And it's not my favorite, because maybe it's more of a promotional story than actual, what I believe in, what I can see. But yeah, go on.
I felt like today's announcement's the example of that. It's like they're talking about, they haven't even got a business going in Germany, and they're talking about they've commenced their strategic expansion into France. And it's like, oh man, I feel like they're just looking around for, another good story to sell. And the announcement's like, oh, we've applied for our first lithium exploration license in the region. And it's like just trying to get people, I feel like it's just meaningless. And this company it's maybe not meaningless, but it's just such a gunner company. It's so far from doing anything. Like, you know, they're talking about applying for an exploration license in France. You know, it's not clear that they're making much, you know, progress anyway in their sort of main game in Germany. And they're, you know, losing plenty of money every quarter. Like last quarter, I think it was about 17 million euros out the door. Now they've got 150 or 160 million euros. So like they got plenty of money that they've managed to raise from people. Let's see what they do with it. Like I think that they'll achieve very little, but maybe they won't.
I agree. Look, I completely agree with you. This is 100%, you know, what you've said. It just resonates completely. And the thing is, they're going to spend more money with this French, you know.
Yeah, exactly. Like, hey, they've got 160 million euros to spend. You know, it's good times. They're going to be splashing it left, right, and center. I don't know how shareholders ever expecting to get paid, but if they are going to expect to get paid, then even the most optimistic shareholder must think that you know the company won't be like profitable for many years. And you know,
look, I again, I agree. It is meaningless. I mean, they could come up with, you know, all these assets in France, Italy, you name it. That doesn't matter. I mean, it's just pretty announcement. Nothing but that. And you know what? You know, I just returned from Alsace region where they actually picked up those things. To me, zero chance of getting a project up in there. This is the one of the most picturesque regions in France, and there's going to be so much opposition to build anything in that region. They're Buckley's chance, to be honest. And I know, you know, there's proponents that we need to have extract lithium because, you know, the industry is growing and so on. It's going to be not around that region. I'm sorry, but it's just not going to work, I don't think. So for me, yeah, look, and again, go back, show us that you can actually do something in Germany first before you start expanding somewhere else.
Yeah, pretty much.
Anyway, let's move on. So yeah, we're both on the same page on that one. Next one I want to quickly mention is ASN. Again, we've got a few investors that really like the story. And today's announcement, you know, they've upgraded their resource, but you know what? I'm not too sure. I mean, yeah, they've got it up to about a million tons. Sorry, yeah, a million tons of LCEs, which is you know, lithium brine. But the actual grades seems to drop down because I had a look at the previous, and they were high. And I know somebody said, you know, the grades are maybe not as important in the brines, but I feel, you know, I still feel there's got to be some very importance in the grades, you know, because the lower the grades, they're going to be high cost. I mean, this is just, again, economics 101, extraction wise. So, you know, you can't tell me that if there's really low concentrations of grades in whatever you're extracting, you're still going to be okay. There's going to be some economics come into it. So I'm not so sure still about, you know, I've still got question marks over it. So let's see what they do. They've got a big resource, and, you know, the resource at this stage probably doesn't matter. It's big already, so that's okay. I just want to see the economics of this really actually work on these sort of low grades, and then I'll be happy. But I mean, I'm not a big fan of it because, like I said, I just want to see it in operation, and I'm questioning that, and I want to see development of this, and then come up with the cash flows. And if it's profitable, then good on you. But I'm not so sure, Claude. So I'm just gonna probably put it aside. Whoever's got it, and I know it's trading at the moment. So this is on a daily, which is okay. But don't fall in love with it. And again, I'm going to reiterate the same thing that I've been talking about it before. Have a stop loss, and I think, you know, if you're going to be aggressive with it, maybe put it 25 and below. If you're going to be even more aggressive with it, you can see there's a bit of a come down, then it bounce off at 28, so maybe underneath 28 if you're going to be even further aggressive. So anything below that, you're going to be selling it. So trade it for the moment and see how you go. Lithium is hot at the moment, so it doesn't take much for it to go up, and there's a lot of stories out there to play with. All right, let's move on to the next couple, because you more probably come across those stories than me. Let's start with bids, which you want to talk about.
Yeah, so Bid is a company that has been in like basically the bill checking and verification and business. Let me see. What do they describe it as? Bill identity. It's basically utility bill management. So it allows big power users to make sure that they're, minimizing their utility bills. Things are getting a little more complicated as well, in the sense that, buildings might have solar panels on them or some kind of system to increase energy efficiency. So it's sort of designed to, it's designed to help companies minimize their electricity bills, basically.
Okay.
And also, they can do like carbon reporting, I think, and a few other things like that. But look, it's not a super high quality company, because obviously what they provide, as far as I can tell, is not super essential for anybody. Pretty easy, therefore, to change providers or whatever it is. They're supposed to basically help people optimize their energy usage to save them money that way. So you can only really charge them whatever you can save them, and then there's some competition as well. So don't think it's a particularly high quality business necessarily. However, it has recently sort of been transforming itself a little bit more to just focus on being a digital platform that allows big companies to monitor and manage their energy use. So this might be like multi-site businesses, and also trying to sort of advertise and get on in this tail end of companies that want to be net zero or whatever it is. So that's the kind of theme that they're trying to hook into. They've recently bought a business in the UK, and then they've also more recently just sold their rebate business in the US, which was I guess helping companies get energy rebates. But that's only for about US 2.8 million, of which they've only been paid, I think, upfront 2 million. So what's that work out as? Around 4 million overall that they'll get, and a bit less that they've been paid. That'll help their balance sheet in the short term, because it's pretty ugly. I think it has about $7-8 million of cash and quite a lot of cash burn each quarter. I think around 3 million. Let me just get it up. So the point is, I actually have to say, I don't know what you think of the chart or whatever, but this has previously been a hype stock, and it has 7.5 million cash with about 3 million out the door last quarter. For me, this is like a perpetual avoid, and I guess today's news doesn't really change that. I think it'll require a long time before it looks anything different. I guess that's what the chart says as well. Yeah,
definitely. I think the chart sort of, at least it's stabilized, around that 8.5, which is probably goes hand in hand with what you're saying, that they're sort of swapping the business around to focus on the stuff that works for them, but way too early on the chart. So yeah, avoid for the moment.
Yeah, I'd definitely say avoid as well.
Yeah, maybe for the next 12 months, we'll revisit it and see how it goes. Hopefully by then there is a bit more life in the story, and they can drop that cash flows, down to a bit more manageable levels where there's more interest from investors out there. But I understand where you're coming from, and it's something maybe that we could have a look at it again.
Yeah, it could be a good, decent business in there somewhere, but look, it's got a really bad history, so I would be very cautious of it.
Yeah, so avoid from both of us.
Yeah, definitely avoid. And actually, there's another one, EAX, which is in a similar space, that has also had a similarly bad history. I think that these businesses just really did, they could, a few years ago, 10 years ago, they could make a lot of money, because there was a lot of suboptimal charging, say the electricity companies wouldn't have you on the best plan for you, or there'd be basically ways that companies could save a lot of money by just having someone who's an expert look at their bills and find, the best deal for them. But, I think that's obviously that opportunity has disappeared, and both these companies are doing really poorly. Energy Action was the better of the two. Anyway, the other one was JIN, Jumbo Interactive, which is definitely a much better quality of company. They are the big Jumbo Interactive. Oh, what's the site that they have again? I've forgotten it now.
Say again, what's the question?
So Jumbo Interactive, they sell lottery tickets, right? So Oz Lotto,
Yep.
and that kind of thing. So they compete directly with the actual lottery companies themselves. So there's the lot or whatever that I think is owned by the company that owns the lottery ticket, the lottery game, and then there's Oz Lotteries, which is Jumbo Interactive site where you can play whatever lotteries you want to, Powerball, Oz Lotto, anything basically. And this it's just like a retailing someone else's product, so they're completely reliant on the deal they have with, I think it's now the lottery company. And that's always what's made it so interesting. So it can be quite a profitable, good company that gets good growth and stuff. But the problem is that you never know when they're going to have to, well, you do know in another 8 years or something, whatever it is now, they have to renegotiate their deal with the lottery providers. And that's when they can get, again, hit on margins and all that kind of thing. So you have this constant part of their business that's like profitable and has been growing, but it's it's like the turkey story. Like it's good and good and good until one day you get wrecked. And that's kind of what has happened to it in the past. And so it's a risky play in the sense that what they're trying to do is use their current profitability and use debt and etc. to acquire into more of the space where they are an external lottery sort of provider. So someone who wants to run a lottery could just use Jumbo Interactive software, etc., to actually manage the whole lottery process. Even though Jumbo wouldn't be the lottery license holder, they've got a software solution that allows actual lottery people to run the lottery. And with that, they've made 3 acquisitions. I think they're especially expanding in the UK. Today's news was just that they've settled on one of those. So yeah, heading in the right direction in terms of that business plan, although the jury's still out in terms of whether it pays out. I nonetheless think it's an interesting company, way better quality than the little microcaps we were just talking about before. And it's got a plan that at least makes sense. It's just that you've got that specter of what happens in 8 years or whenever it is they need to renegotiate their deal.
I've got 3 questions for you with this, right? So first of all, they obviously take a little bit of a clip of every ticket they sell. So for me, I'm thinking I'd rather save that $2 and rather go to the news agency and get it like that. So that's one thing I don't.
Well, I think the news agency takes a clip as well. I think the news agency takes a clip as well, but you're still nonetheless live. You're nonetheless correct. I think it's more expensive to buy at Oz Lotteries than it is to buy at the lot, which is owned by the actual people themselves, basically.
Yeah. So the second question I've got then is, why doesn't the lottery do it themselves, right? Do something with it, because this is just a third.
Well, they do. That's the thing. That's what they started doing. So for ages they didn't, right? And that was the weird thing. Was because they didn't used to do it eventually, back in the day, but now of course they do. So it's just making it worse and worse for Jumbo Interactive over time. So looking at the lot, 10 games for Oz Lotto is $14.40.
Yeah. And
10 games for Oz Lotto at Oz Lotteries is $16. So you're exactly right. There's that's a couple of extra, a little bit extra that they charge just for the people that happen to be signed up with them and they're using it and they're lazy or whatever.
Exactly. So, that's the thing. So presumably there's going to be eating into their business by the lotteries, right? They're going to probably start losing market share in that. And the last thing is, I always find that really strange that the business really actually relies on big jackpots, right? And we had a real big one last week with a 130 million, I think, Powerball or something like that. So
yeah,
I just find the business itself, while obviously profitable and growing, but fickle. It could, like we said, it could change overnight if something.
I think the issue with it is this was a good one worth buying when it was $4 share price, and it was being priced like it's quite a low quality business.
Yep.
But it's probably a medium quality business at best. or a low quality business. And now it's getting priced like, you know, a medium or even high quality business. So I think that the risk's more to the downside.
I agree with that statement and assessment. So even though it looks okay on the chart, so I'm looking at, it started to poke its head up, as you can see on the chart on the weekly. I'm not quite interested yet. There's going to be a trade with it probably, right, over the next maybe week or 2 or 3. So let's watch it. But I agree with you. I don't think I'd be buying it for my portfolio for the long term. I think there is definitely hurdles for me and issues that just too much. I'd rather buy some other companies that are priced at a higher multiples that I think, you know, have got a better outlook and future. So yeah, not for me, but you know, it could be a trade here and there with it over a long period of time. All right, let me have a look. There's nothing else I need to talk about today. If there's anything else, speak up now, Claude. Otherwise, we'll call it a day.
No, that's it from me.
Fair enough. So we'll call it a day. Thank you much for joining me. I really enjoyed this Wednesday session, just you and me talking just really fundamentals without too much charting. And have a great day, and we'll see you again tomorrow.
Likewise, Pete. Have a great day yourself. Thanks for the chat.
Thank you. Cheers.
Bye.